Now we get into the fun part, the not fun part. We will talk about it. Like I've said before, unfortunately, because this is cryptocurrency, I know a lot of people don't agree with my politics. You don't have to. I don't even wouldn't even say that I'm correct about it. I definitely get things wrong. I'm willing to have open conversations about different things, but because of the nature of cryptocurrency and its tie-ins to both, local and international politics, it's kind of impossible to go through it and not discuss politics to a certain extent. I'm not even sure that really we would say that the Russia-Ukraine thing is necessarily politics at this point. But we have an article here from CoinDesk that is pointing out something that I was kind of talking about, I think, over the past few weeks, which is that weird correlation between the stock market and cryptocurrency. Now, in my humble opinion, from the view of it, I think, yeah, go ahead and throw things like Ethereum, Solana, Cardano. I don't consider them to be separate from the stock market because they're, essentially board-run, developer-run projects that essentially when you're investing in them, you're kind of investing into a company, as opposed to Bitcoin, which doesn't have that oversight, does function more like a currency or at least a store of value from the public's perception as a whole. I think there needs to be a decoupling of the markets that really clearly acknowledges the definitions of each cryptocurrency, especially if we're looking at the white paper for Bitcoin. I think a lot of that is unrealized by the general public, which is why Bitcoin kind of gets lumped in over here and ends up being translated into being closer to the stock market, which is obviously due to the stuff happening with Russia and Ukraine right now, causing huge dips in the market, where I think Bitcoin's at 36,000 right now. Ethereum's down to 2,473. All the rest have, just they're all getting slaughtered. And part of that is this. The point is, though, of this article is that traders prefer gold and fiat for safe havens over Bitcoin as Russia goes to war. And this is interesting. So, and we need to be aware of it. And we also need to be realistic about it as cryptocurrency miners and investors, because, just because you may know, or I may know, that it's a more solid investment than fiat currency doesn't mean that's the way the rest of the world sees it. And because all of this is based off of price, what people are willing to pay, we have to take this into account. Like, it's not something that you can just ignore based on your principles and your own personal belief system, because what's happening, what is reality, is important, right? And so don't get too clouded by your involvement within cryptocurrency. So good morning and welcome to The First Mover, our daily newsletter, putting the latest moves in crypto markets into context. To get it in your inbox each week and each morning, blah, 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 you can sign up there. Here's what's happening this morning. Market moves. Bitcoin drops, gold rallies as Russia attacks Ukraine. Bitcoin risks deeper drawdown as U.S. traders prefer commodities and fiat safe havens amid Russia-Ukraine crisis. And so let's do it. Russia's decision to wage war on Ukraine has sent shockwaves through financial markets. While equities in Bitcoin are down, gold, oil, base metals, agriculture, commodities, and currency market safe havens like the US dollar and the Japanese yen are trading higher. Broadly speaking, markets are displaying the usual unease with geopolitical tensions. However, some in the crypto community may be disgruntled to see the top cryptocurrency again missing a haven bid. Crypto pundits have long hailed the top cryptocurrency as a better inflation hedge and haven asset than gold. However, price action, particularly since the influx of institutions and sophisticated players in the market after the March 2020 crash, suggests otherwise. The cryptocurrency has moved more or less in tandem with stocks. Data tracked by Korea-based analytics from CryptoQuant shows Bitcoin's 60-day Pearson's correlation coefficient with the S&P 500, Wall Street's benchmark index now stands at a record high of 0.56. Quote, BTC or Bitcoin is getting adopted by traditional institutions, end quote, crypto quant said in a Telegram chat. Quote, it's being owned by new players who trade stocks. Bad news, Bitcoin is not a safe haven asset for now. It's pretty clear institutional interest hasn't done for Bitcoin what it was supposed to do, at least in the eyes of crypto investors, that is. Established the cryptocurrency as a digital safe haven better than gold. And that's because you all got distracted with NFTs and Ethereum and Solana. If somebody is introduced into the cryptocurrency market through NFTs, they are introduced through Ethereum. And we already talked about the difference between Ethereum and Bitcoin and why they are different. And if you have 80% of the population that's participating within cryptocurrency focused on NFTs, and then they are introduced to Ethereum, which has a board head and basically a whole bunch of VCs and stuff like pre-invested into it, then it clearly sits in the stock market. And because that is the public institutional investment that is being attracted to, Bitcoin isn't realized as it should be. And I'll keep beating that drum over and over again. And if you basically go into a conversation with someone surrounding cryptocurrency, you need to make that distinction every single time. You need to make it very clear that Bitcoin is not what Ethereum is. It's not what Solana is. It is not what any of these other cryptocurrencies are. Then you can have a public perception shift, and then maybe it decouples. But as it sits now, and because of the way people are being introduced into the market, it's going to remain coupled with stocks. That's the way it is. The fact that fiat safe havens are doing better than Bitcoin perhaps indicates that the cryptocurrency market as a whole is at the far end of the risk curve. Bitcoin was largely uncorrelated asset before the COVID crash, and more so during the early bull cycles when institutional participation was almost non-existent. A continued risk off might push Bitcoin down to 30,000, which acted as strong support zone in January 2021 and 3 months to July of 2021. A potential break lower could confirm a double top breakdown on the weekly chart and invite more selling pressure. What I say a little while ago, I think my predictions were ETH at 1,100 and Bitcoin at 21K, previous all-time highs. And then we kind of saw the institutional investing. We saw some bounce backs. We were kind of in this weird like sideways market. It seemed like, okay, well, maybe now with like institutional investments and all of that sort of stuff, maybe the bottom is this bottom. Maybe that's the case. We're going to sit here for a couple of years and then we'll go back through the traditional Bitcoin super cycle. Now, just to be clear, to define the super cycle once again, it's every 4 years. You basically have essentially what is known as the halving of Bitcoin, where the reduction of the block reward happens for the miners, meaning that they get paid half of the block reward that they previously did. And this spurs on a price increase so that miners can cover the cost of power. This is basically something unique about Bitcoin that sets it apart from other investment strategies, because you are on that 4-year cycle. After that halving happens, you end up having basically a huge spike that causes a bull run that lasts for about 2 years. And then, of course, everything kind of settles down and it crashes back down to the previous 4-year cycle's all-time high. Once that has happened, essentially you have 2 years of a bear market, and then the halving happens again because it happens every 4 years. And then the increase in interest, of course, once again goes through the same cycle. Are we going through that same cycle again, now spurred on by, of course, geopolitical tensions? Maybe. And then we just have to sit back and wait. From the mining perspective, this shouldn't be necessarily a negative thing for you. What this does is give you another opportunity. You see, the first super cycle that I was participating in, I did not get in on the opportunity quick enough, and therefore I wasn't able to build up enough hardware to actually be significant within the market. If you fail though, and here's what I did, I tried again. Once I saw and realized that there was this 4-year cycle going on, while the parts were cheap, while the pricing was good, I invested in all the hardware. And then when it started to come back up, I was rolling and I was able to do this. Not only the YouTube, but the mining farm. Both of them have been performing very well for me. So this is an opportunity for everybody that hasn't gotten into it, if they want to get into it, to go ahead and hop in, because the pricing of the equipment will go down. This is not financial advice. This is what I did, and this is why I did it, and the whole thought process behind it. But it does look like my previous predictions could potentially be true, meaning that we could see Bitcoin go all the way back down to 21K and Ethereum go down to 1100. There are people that are trying to predict lower than that. I don't see that actually functioning, because I don't think that the Bitcoin miners would be able to function below that. In that case, if that happened, you would go to zero, but the institutional investment within Bitcoin mining tells me that that's probably not going to happen. The margins are going to be super thin, even to the point where I don't know necessarily if I'll be able to clear all of my costs. I'll definitely have to sit down and look at it. I think I had already run it from another 50% drop from here. It may happen. We'll be able to cover costs on the farm and then just be trying to pick up equipment through outside income from things like YouTube or whatever. If I go back and start wrenching, or if I go back and start working in IT, then we'll just build up and we'll be even stronger for the next bull run. That's the way it goes. And that's the way it sits, boys. It is what it is. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.